How's it going, everyone? It's Sam. We have some economic data. We have some Bitcoin news. We have insights from the 13F filings yesterday, where we saw a lot of institutions add or start a position in the Bitcoin ETFs. We have a lot to get through. If you don't mind, hit subscribe. Turn on that bell notification underneath the video so you can see future videos just like this one as soon as I make them. If you want to trade crypto, there's a link underneath the video to Margex where you can sign up in just a few seconds. You can start trading without KYC. You don't need a VPN. This is a very interesting site because of the fact that they allow you to use all different forms of collateral, so you can trade the Bitcoin chart with Chainlink, for example, or USDT or Ethereum or Solana or Bitcoin, which can be really cool. So definitely check that out underneath the video, and let's start here. We just got a couple soft inflation prints. Jobless claims came in today lower than expected. Retail sales higher than expected. So Will Clemente says, from imminent recession to Goldilocks in 1 week. Yeah, I mean, you never know how much of this is actually happening versus maybe massaged, or the metrics are changed. But the fact is, things change in the economy quite quickly. Unless we go into a deep, deep recession, the fact is that people change their tune relatively fast in the economic world, and you have to stay on your toes. You have to keep on investing for the long term in assets that will appreciate just in a normal economy, right? We're gonna have booms and bust cycles, but yeah, I think Bitcoin is a good long-term play. Of course, you have to be able to stand the volatility, which we'll talk about here in a second. But keep in mind, Bitcoin halving progress is at 8%. This is pretty crazy because we're already almost a tenth of the way to the next halving. It seems like we just went through a halving, which by now is actually almost 4 months ago. Okay. Now you can see here what typically happens 8% after the halving. This first one, we did have a big run up, like almost a 10x run up. In this cycle, though, it was just sideways. 2016. And this one in 2020, maybe just slightly up, just slightly. In this halving cycle, down or just sideways, basically just bump, and then we're still at the same price. But what happens after is big moves up. Big moves up, big moves up. So hopefully, we have that take off in the fall. Most likely we will. Keep in mind, on average, Bitcoin peaks about 480 days after the halving. We're currently 117 days after the Bitcoin halving. So we're still nearly a year, almost exactly a year, 363 days away from the peak, the typical peak. Now, sometimes it's later, as you can see here. Like there's one cycle, 2012, where it was around 370 days maybe. Then the next cycles, it was more like almost 525 days, somewhere around there. 525, 540. So it could still be later than 480 as well. Just keep that in mind. So maybe we peak out in the fall of next year. At least that's where the last two cycles have shown us. But of course, whenever something happens and everyone's expecting it, it typically doesn't happen that way again. So yeah, I'd be looking at some time in this range for us to probably peak out, unless you're someone that thinks we're just never going to fully peak. Like if you're someone that thinks we're just going to continue going up. Now, I still think we're going to have dips. I still think we're going to have crashes. The fact is, even where Bitcoin's at now, it just went through a 25% move in a few days. And indices do the same thing, right? Not that quickly, but they'll fall 20, 30%. And the fact is, they're made up of assets that are less correlated than just Bitcoin. I mean, Bitcoin itself is just one single entity or one single technology. It'd be like saying that Google's never going to go through a 30% correction, or Amazon, right? Maybe one day that doesn't happen if it's gold size or bigger. But until then, I still think we're going to experience volatility, a good amount of volatility, which is why trading can be so profitable, because you do have volatility. 3 Bitcoin ETF insights from the Q2 13F filings by $100 million investment managers. And this is just like a shorter version of Matt Hogan's thoughts. He's a CIO over at Bitwise. So this is a synopsis. 30% increase in institutional Bitcoin ETF holders versus Q1. So they had more overall ETF holders, which shows some people, even after 3 months of researching, they still hadn't done enough research to start allocating towards the Bitcoin ETFs. Or maybe they had done enough research, but they just didn't want to buy yet. 44% of institutional holders increased their Bitcoin ETF positions. So people that bought in Q1, 44% of those people added exposure in Q2. Hedge funds remain the biggest institutional players. Keep in mind there are some other entities that are buying Bitcoin ETFs as well, but hedge funds remain the biggest institutional players. I think when that changes, when that switches to banks and money managers that are like the BlackRocks and Fidelities of the world, when they're the biggest institutional players, that is going to be very interesting, because then they're going to be putting Bitcoin in their own portfolios, and there are a handful of companies that already do that. But when that's the largest buyer of the Bitcoin ETFs, that'll be very interesting, because people will be buying Bitcoin without even knowing it, really. Or they'll look up a portfolio that has 100 different assets, and Bitcoin's just one of them, and that won't change their mind into buying or not buying or selling if they already own the ETF. So that will be a very interesting time. And when we get these in retirement accounts and target date funds, that's when things get really crazy. Bitcoin's ETF flows yesterday were actually negative. So this may have contributed to some of the price action. I saw some people talk about how no big news can be talked about because we're still falling down. What's the point? As you can see, we had an outflow of 81.4 million. 57 million of which were from GBTC. Fidelity had an $18 million outflow. ARK had a $7 million. Bitwise $6 million. BlackRock had 2.7 million in inflows, and Franklin had 3.4. The price dumped about $4,000. CPI was lower than expected, which should have been bullish, but we also had 10K Bitcoin moved to Coinbase from the US. So it was a negative day overall for ETFs, which could explain, along with some of this fear about the Bitcoin being moved over to Coinbase, that could explain the move down. Keep in mind, there are going to be moves down all the time. Bitcoin doesn't always correlate exactly with what news you're seeing. Some things take a while to start happening for Bitcoin. Like, we have times where there's nothing but good news and Bitcoin's price goes sideways for a while. I mean, we had this during the bear market, right? You can get good news and nothing really happens. But what that does is it creates a backlog of catalysts that eventually push up the price. A good catalyst should, over time, cause the price to move up. Now, the news of it could send the price up right away. But a good catalyst will also push up the price over time, like some company buying or country buying, or some new way of using Bitcoin that we didn't have before, right? Like maybe you can buy houses with it all of a sudden. People will look at that, and over time they'll buy Bitcoin more and more because of that, or they're more likely to buy Bitcoin, right? They understand that there's an off-ramp that's easier. So that kind of stuff happens all the time, and sometimes it doesn't affect price. Sometimes there's all good news, but some whale decides to dump 10K. Now, does that mean that the news is negated, that there is no point in listening to the news? No, that'd be stupid, right? Good news is good news, but sometimes it doesn't affect the price right away, which is fine by me, right? I'm happy to listen to the news, know that stuff is bullish, be able to buy in when times are boring or when there's a lower price, and then realize that I am unemotional enough to stack up all that good news, realize that's a good time, and then we move up eventually. Okay? I don't have to have the price go up tomorrow because I have a long-term outlook. Keep in mind, too, there is a new leverage long MicroStrategy ETF that was just approved by the SEC. Now, this is 1.75x, which is interesting. Pretty low leverage, but also MicroStrategy does move around a lot. It's quite volatile, sometimes even more than Bitcoin. So that will be interesting to see If people play that right, they can make a lot of money. Of course, if you want to trade on higher leverage, 5x to 100x, there's a link underneath the video to MargX. Of course, make sure you know what you're doing. Let me know your thoughts on all this underneath the video, and I'll see you all in the next one. Bye.